Hey everyone, welcome back to another dividend investing video. Today, I'm sharing my January 2025 portfolio update for our public Dividend Growth Income portfolio. I'll walk you through how much it's earned in dividends this month and give you a look at how my portfolio has been performing. We'll talk about which stocks paid out, how it's compared to last year's January, as well as versus the broader market in this month. I also want to hear down in the comments how your January dividends are stacking up. We have a lot to cover today, so let's just get right into it. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. It's hard to believe January is already in the books. The Dividend Growth Income portfolio has officially entered its third year. As of today, the portfolio sits at a value of $41,153.05. So over $41,000 invested in just over 2 years. I'm pretty happy with that. The key has been staying consistent and making sure I add something to the portfolio every month. Small, steady contributions really do add up over time. With compounding, dividend reinvestment, and future dividend raises, this is only going to snowball. If I keep this up a few years from now, the passive income will really start making a noticeable impact. Now, here we are on the Fidelity webpage. This is my favorite brokerage. I find their iPhone app incredibly easy to use and intuitive for buying fractional shares of stocks and ETFs, as well as keeping tabs on the portfolio. This is a taxable account, meaning all dividends and capital gains are subject to U.S. federal taxes. This is something to keep in mind. Now, I created this portfolio as sort of a public experiment here on YouTube to share the progress and demonstrate one way to build up a passive income stream over time. So let's get into how much dividend income this portfolio collected in January. And remember, the overall objective here is dividend growth over yield. This is not a high yielding portfolio. The focus here is on growing this income steadily over time, not chasing the highest yields, because I want to see some capital appreciation as well. I want to see total growth. The idea here is to build a sustainable, increasing cash flow that will compound year over year. So I'm not looking to maximize income at this time. For the month of January 2025, the Dividend Growth Income portfolio received dividend payments from 8 different companies. Let's go over each one and see how my dividend income is shaping up early here in the year. On January 2nd, I collected the first dividend of the year. It was $6.38 from automatic data processing ticker ADP. ADP is one of the largest providers of payroll and human resources services in the world, and they help businesses with things like payroll processing, talent management, and benefits administration. The company has been around since 1949 and works with over 800,000 clients globally, making it a big name in the HR and payroll space. Then on January 9th, I received my dividend from Vici Properties, ticker VICI, in the amount of $19.38. Vici Properties is a real estate investment trust that specializes in owning and managing properties primarily used for gaming, hospitality, and entertainment. They own a large portfolio of iconic casinos and hotels and other entertainment venues, partnering with some of the biggest names in the industry. Since its spinoff in 2017, Vici has been building a strong track record of growth in both assets and dividends. On January 10th, I received an even $10 from Medtronic PLC, ticker MDT. Medtronic is one of the world's largest medical device companies, known for its innovations in areas like heart surgery, diabetes management, and spinal care. With a long history of reliable dividend payments and a strong focus on improving patient outcomes through cutting-edge technology, Medtronic has established itself as a staple in the healthcare sector. On January 14th, Mondelez International, ticker MDLZ, paid me $10.84. Mondelez is behind some of the most popular snack brands in the world, like Oreo, Ritz, and Sour Patch. The company has a strong global presence and focuses on delicious, easy-to-enjoy products that people crave. Mondelez has consistently delivered double-digit dividend growth over the last decade, thanks to its established portfolio of beloved brands. Then on the 15th, I received $4.71 from Agri Realty, ticker ADC, a real estate investment trust that specializes in triple net lease properties, primarily focusing on retail locations leased to high-quality tenants like Walmart, Kroger, and Home Depot. I like this one for both an income standpoint and for the growth potential ahead of it. Agri is one of 2 holdings in the portfolio that pays out on a monthly schedule, and the other company on a monthly schedule paid me on the 17th, and that is Main Street Capital, ticker MAIN, Maine. I received $6.39 from Main Street Capital. This is a business development company that focuses on providing financing to lower mid-market companies. They specialize in private equity and debt investments, often targeting growth-oriented businesses. With its monthly dividends, Main Street Capital has been a reliable income generator for dividend investors. I've been happy to see their consistent payouts and strong track record over the years. On January 22nd, Cisco Systems, ticker CSCO, paid me $10.03 for the privilege of holding their shares. Cisco is a global leader in networking technology, providing a wide range of products and services that help businesses connect, secure, and manage their networks. Known for its reliable hardware and software solutions, Cisco is a staple in the tech industry, and the company has been a consistent dividend stock one we're happy to hold in the Dividend Growth Income portfolio. And finally, on January 29th, I received $10.88 from Comcast, ticker CMCSA. Comcast is the media and technology conglomerate known for its cable television, internet, and broadband services, as well as owning NBC Universal. As a major player in the telecommunications entertainment industries, Comcast serves millions of customers across the U.S. and continues to invest in new media platforms and services. Despite challenges in the cable market, the company has a long history of paying and growing their dividends. Altogether, that's $78.59 in dividend income received in the Dividend Growth Income portfolio for the month of January 2025. While not a huge amount, I am happy to say it's more than double what we collected in January of 2024 when the account received $38.55. And it's a whole world away from the $5.17 the account received back in its infancy in January of 2023. So I like the trajectory here. I'm digging it, even though it does take time to really see it, right? It's definitely progress, and it feels great knowing the dividends are steadily increasing year over year. Now, speaking of raising dividend, 3 of the companies in the portfolio increased their payouts in January of 2025 here. On January 29th, BlackRock Inc., ticker BLK, the world's largest asset manager, announced a 2.2% increase to its dividend payment, marking its 16th consecutive year of dividend growth. While the growth rate has been underwhelming in the last couple years, the payout ratio is now sitting close to the low end of management's target range. With this in mind, we expect dividend growth to return to around the 10% range next year, a positive sign for BlackRock's future performance. Also, on the 29th, Comcast announced a 6.5% raise, marking 17 straight years of dividend growth. Comcast is facing some serious challenges as they're losing subscribers at a faster rate than they previously projected. However, they're sitting on a solid cash pile, have a low payout ratio, and a strong credit rating. They also recently announced a $15 billion share buyback. Now, despite these strengths, the news of the broadband subscriber losses caused shares to plummet, and Simply Safe Dividends downgraded Comcast's dividend safety score from 89 to 80. So we're going to have more on Comcast to come in an upcoming video. Make sure you have that notification bell checked so you don't miss out, especially with the algorithm being a bit inconsistent to me these days. And there was one more dividend raise to close out the month. On the 31st, Chevron, ticker CVX, announced a near 5% increase to its dividend, extending its streak to 38 consecutive years of dividend growth. Chevron continues to be a reliable dividend payer in the energy sector, maintaining a strong balance sheet. Let's shift over to our performance tab in the spreadsheet. We started the month of January off with a portfolio value of $39,266.95. The year started off strong for the portfolio. We're up over 3.22% for the month of January for a gain of $1,282.05. That's unrealized capital gains plus the $78.59 in dividend payments we just talked about. Add in the $600 of contributions made for the month of January, we are closing out the month with a portfolio value right over the $41,000 mark. For the month of January, the Dividend Growth Income portfolio outperformed the S&P 500 by a little bit, with the S&P up about 2.7%. The portfolio has a forward annual income right now just a tad under $11,000. That's $1,097.33. So we're getting close to another milestone for the portfolio. Once we hit $1,200 for the portfolio, we'll be bringing in an average of $100 per month. I'm pretty excited to hit that. In fact, let's move over to the dashboard page now, and I can show you the forward income goals and the progress we've made so far. All right, so this page has basically all the important information in one place, and I'll start by highlighting these forward income goals. I've set some arbitrary income goals here just to keep a measure of progress. I don't have a set time to hit any of these, but I find incremental, achievable goals help keep us motivated. So the first goal was just to get this portfolio to paying $1 per day and then over $50 per month. And now we're 91% of the way to our next goal of $100 per month. And we're going to get to this here in the next few months easily. And we're 60% of the way to that next goal after that of $5 on average per day. Then we're 45% of the way to the goal of $200 per month, 18% of the way to $500 a month, 9.14% of the way to $1,000 a month, and 4.5% of the way to what I consider the kind of ultimate goal for this particular account. And that's to bring in $2,000 a month in dividend income. At that point, I'll call this mission accomplished. Not that I couldn't continue pressing further, but this is just one piece of my overall retirement picture, and I think an extra $2,000 a month, it would not suck. And you know what? There's a lot of parts of the world where you could get by just on $2,000 a month and live a pretty good life. Now, as mentioned, current income right now is not the goal, which should be obvious with having a portfolio at a 2.67% yield. But notice my yield on cost, what I've actually invested into the account is 3.16%. I want to see this grow. I've contributed $33.6 thousand into the account for an unrealized gain of 18.32% with a true gain of 22.44%, or $7,539.27. The forward annual income of $1,097.33. You can think of this as about $91.44 per month on average, or $21.10 per week on average, or $3.01 per day. Right now, this could pay my phone bill and my daughter's phone bill, so that's something. But of course, I don't take that cash. Instead, I reinvest the money using DRIP, which simply means the dividend is essentially paid out in shares of the company's stock instead of cash. It's a nice hands-off approach just to keep the snowball rolling. Now let's take a look at the holdings in the portfolio. I have them here sorted by weight with the heaviest on top. I'm just going to run through these quickly. The top three positions are the ETFs, VYM, SCHD, and VOO. Now, VYM and SCHD are dividend-focused ETFs, while VOO tracks the S&P 500. Together, these three ETFs make up about 16 to 17% of the entire portfolio, and I like the diversification and hands-off approach these tried-and-true ETFs provide. Then we have the individual dividend growth stocks, which I think are a lot more interesting. We have, in order of weight, McDonald's, Broadcom, Starbucks, Main Street Capital, Cisco Systems, MasterCard, Kroger, United Healthcare, Home Depot, NextEra Energy, Snap-on, Mondelez International, Procter & Gamble, BlackRock Inc., Agri Realty, Vici Properties, Waste Management, Medtronic, Lockheed Martin, Automatic Data Processing, Amgen Inc., and Comcast. That's a lot of stocks, I admit, perhaps more than ideal, but I do like having a broad base of dividend payments. Now, sorting by performance. Here's my top three performers at this time. We have Broadcom up a whopping 146%. BlackRock is up 45%. And Starbucks, which had a really great week, is now up 42%. Not one I'm looking to buy anytime soon. These definitely have a lot more green than red in the portfolio. But let's look at the losers, the stocks that are underperforming. These include Comcast, where I'm down over 15%. Mondelez International is down 13%, and Vici Properties is down 3%. I'm also slightly in the red on Chevron and Lockheed Martin. I see plenty of opportunity with this lower performing group of stocks, although I'm starting to have, let's say, reservations about Comcast. But that's a topic for another video. Otherwise, I'm pleased with the mix we have here, and I think it's doing pretty well for me so far. All right, let's take a quick look at the projected dividend income for February and beyond. My strongest months right now are March, June, September, and December, where I'm averaging $160 a month in dividends. Then we have January, April, July, and October, where I'm collecting about $80 a month from that group. However, February, May, August, and November are my quieter months from a dividend payment perspective, as I only receive dividends from 5 companies in the portfolio. For February, we're projected to collect about $30 in dividends. And here is the breakdown. $4.67 from Agri Realty, $2.09 from MasterCard, $6.29 from Main Street Capital, $8.57 from Procter & Gamble, and $9.08 from Starbucks. And that brings the total for February to an estimated $30.69. But not to worry, because in March, I'm expecting to hit new record highs in dividends collected. So make sure you are subscribed and have the notification bells turned on to stay in the loop. Also, please let me know down in the comments if there's any stocks you think look appealing for the month of February. You never know, I may feature them in an upcoming video, so let me know. If you want to see exactly what purchases I made in January, both in this dividend account and in my Roth IRA, go ahead and click into this next video. Thank you so much, and until next time, keep investing.